A lot has changed since, Rob. There has been a lot of developments in the institutional space.
And it applies to AI and DeepSeek as well, right? They just went and open sourced their entire model.
So tokenized assets make a lot of sense to me because then it's just a digital representation.
Crypto doesn't have a tech problem, it has a go-to-market problem. And that, I think, is like a nail on the head with what you're saying.
Welcome back to The Roll-Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Redstone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. Redstone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the Redstone exhibition today.
What's going on, guys? Welcome back to The Roll-Up. Today we have Muneeb from Stacks to talk about the latest developments in Bitcoin on the institutional side and on the roll-ups and scaling side. So, Muneeb, it's good to have you back. Welcome.
Thanks for having me.
A lot has changed since, Rob. There has been a lot of developments in the institutional space.
Absolutely. I mean, Muneeb, I think we had you last probably about 6 months ago when the entire Bitcoin rollup L2 space was taking off. There was much discussion about OPCat and people trying to scale the expressivity of Bitcoin with different side chains and networks. Can you just kind of give us like your quick and dirty take on the last 6 months and get us caught up, and then we'll push forward.
Yeah, I would say at a high level, what's happening is that if you go back like a year or the time of that podcast or even slightly before, at that time, like I've been working on this for a while, right? Like I'm one of those believers who always thought, Bitcoin is going to become programmable. There are going to be L2s. There's going to be a ton of Bitcoin liquidity, and a lot of stuff will actually end up getting built on Bitcoin. And people are very skeptical of that for a very long time. So a year and a half ago, when Ordinals sort of like was taking off, new L2s and designs and BitVM, which is sort of a bridge, we'll get into it, was coming up. There was, I would call that phase like initial excitement. So there was sort of like a flurry of new teams coming up, new capital coming up, everything's exciting. It's like initial excitement phase, and I think we sort of like passed that, and some of that excitement dies down. And I sort of like really like that phase because what happens is that it sort of like separates out the really good ideas from the so-so ones and really good teams from the so-so ones, right? Because people who are dedicated, who actually know what they're doing, and they're going to solve these problems. But the initial excitement sort of like dies down. And a lot of people, like this happens all the time. Like it's like a mini bear market for Bitcoin L2s, right? And what people are not realizing, again, there's a lot of alpha here now. What people are not realizing is that some of the technologies are actually moving faster than even I thought. I'll give you one concrete example. A bunch of this was enabled by this technology called BitVM. At a high level, it basically enables trustless L2s, like Ethereum has. So initially people get it. It's a simple idea. ETH L2s are like 80, 100 billion market. People always thought you can't have L2s that are trustless on Bitcoin. And then suddenly there's a product that says, oh, you can, right? Like you can get into the security models, but it's like a one of n, which is basically trustless, right? Like one could be yourself. You're trusting yourself only. And then when the excitement died down a little bit, people are like, maybe this is going to be more complicated than we thought. It's going to take longer than we thought. And what people are not realizing is there's a thing called BitVM 2, and multiple teams have done their own versions of it. And there are even BitVM 2 based bridges that are live on testnet today, which in the grand scheme of things is faster than even I predicted, right? Like we have our Stacks ecosystem, we have our own R&D going on these things. And we're like, wait a minute, this actually went faster than we thought. So I think we need to recalibrate here a little bit, but it's super exciting, right? So it's one of those phases where there's alpha here, where excitement died down. Some of the people are like, maybe, this is going to take a while. and things are actually moving faster. So people who would be able to sort of like really come in, both developers, investors, and sort of like people who are interested in the space, I think they can do a lot here at this point in time. And personally, like I'm super excited about that.
So the way that BitVM and BitVM2 was explained to me initially, and the way I understand it is almost this natural progression where you're right. There was this initial excitement. We had BitVM, and it provided this trustless bridge from the Bitcoin L1 to these Bitcoin L2s. But it had some problems. There was an issue with kind of it was crypto economically secured, and so there was an issue if everyone left at once, it'd be almost like this bank run on the bridge, if you will. And then so we had BitVM2. Maybe you can explain some of the differences. Um, and then maybe there's even a progression, after that, which is cat VM, and that enables like an even grander implementation into the Bitcoin protocol, which is OP-cat. And so, could you kind of walk us through, and we'll get into the strategic Bitcoin reserve stuff and the institutional stuff maybe a little bit later, but could you walk us through the natural progression of this idea? Okay, people want expressivity on their Bitcoin. We come up with a bridge, a trustless bridge, BitVM. Walk us through how BitVM got to VM2, and then ultimately maybe to cat VM.
Yes. So I think my mental model is slightly different in the sense that BitVM2 I see as a clear progression of BitVM. The OP-cat and cat-VM type stuff, I see them as more like parallel. Like they're parallel going in the same direction, but maybe not like a direct evolution. And for BitVM2, I would say at a high level, we're not getting into the technical details, but at a high level, there were, again, with the initial excitement, there were a ton of issues. Like issues like, oh, these this writing between bridges is very inefficient. The logic gates are going to be a lot, and how do you actually sort of like practically do this, right? The number of steps that you need to do are going to be very long. Who's going to wait like, so many Bitcoin blocks, right? So it's a list of sort of like inefficiencies in the design, and same with the bank run type of a thing. It's like a liquidity issue, right? Like, hey, if everyone tries to withdraw, or you'll always be limited by this amount of capital. And so what happens is that people sort of like, see too much into the inefficiencies. And like my general rule of thumb is you always bet on the innovative capabilities of the human brain, especially when a bunch of engineers are sort of like poking at it from different angles, which is what I clearly saw in the BitVM community. Like a bunch of independent engineers, not even like paid by anyone, and they're just like poking around. So we saw like multiple designs come out, right? Like some of the original rootstock engineers went off and they have their own version. A bunch of teams that got funded on the initial excitement, they have created like different bridges, like Alpen Labs has created a bridge. There are other smaller teams that have created a bridge. And so a bunch of bright minds are hitting at those inefficiencies. And what we are seeing is the round times for doing these proofs is getting shorter and shorter, right? Or the code base for, have like, there was a lot of redundancy and people are like, this is very inefficient. It's becoming more and more efficient. Or the trust assumptions are getting more clear and people are finding problems with these things. So I think that BitVM2, and when I say BitVM2, I actually don't mean any single version of it. There are actually like multiple versions and multiple forks. And it's actually a great thing, right? Like, because you do these experiments and then see which one is actually working better or can do a pros and cons sort of like a comparison. And the way that I see this from the Stacks perspective is like Stacks is sort of like the largest L2 that is live, has a lot of developer traction and momentum going on. We almost see this, that at some point, these BitVM2 or BitVM3 in the future type bridges are going to become commodities, right? Like the best design will get replicated across a lot of L2s. So it's almost like a commodity at some point that, everyone's going to benefit from the research work that's happening. For the OP-cat stuff, it's slightly different, like in the sense that it does rely on, some changes being made to Bitcoin, even though people are arguing that the changes are not a lot. There seems to be some support for it as well. And I think over there, the thing that I like about BitVM is that at least it doesn't ask for any changes to Bitcoin whatsoever.
Yep. Yeah, and I think the OPCat route is very much still in development. We are quite close with some of the StarkNet folks, and I know Ellie is very, very focused on this. Um, and frankly, this idea of being an Ethereum rollup, I think, as soon as we get some of these, like BitVM 2, and I know there's like BitVM 2.5, even it's kind of like weird terminology here, but there's a world where rollups do not need to just settle to one base layer, where we get Bitcoin rollups that also share settling on Ethereum. You could even share to settling on something like a Celestia or a Solana, right? And so, like, I think our mental models of rollups are going to be, or L2s are going to be changed over the coming years, partially because of the work with BitVM and kind of Bitcoin scaling, and then just how people are thinking about ideologies. I think there's a world where there's the largest roll-up can somehow have this multi-settlement feature across different base layers, and so that's going to be particularly interesting. And I think maybe just maybe we get some of the ideology camps that the tribalism to diminish, but I'm not sure. I think the Bitcoin versus Ethereum tribalism may forever persist.
Yeah, yeah. So I think I'll give you my take on this, right? This is something like being a computer scientist and sort of like technically heavy. I feel like this was something that I used to do before, where I would get deep in the weeds of the technical differences with a very strong thesis that, the if you do a pros and cons comparison and then this bridge is like, better in 6 out of 7 uh, features versus the others, clearly sort of like the better design is going to win. And same for rollups and security models and data availability and so on. And I think over the years, one thing that I personally just evolved and realized is that out in the market, I think your go-to market, your speed of execution, your how you actually are doing in the capital markets and exciting the community and developers, which from a computer scientist perspective, it might seem like soft skills, but they're not soft skills, right? Like they actually end up mattering a lot more than the pure technology part. And we've seen some of that in Ethereum, right? Like if you look at Ethereum, 80 plus different L2s, and the ones that are getting the most traction are things like Base, because they have the best go-to-market strategy. They just partnered with the largest exchange, and they have a thriving developer community. Even to some degree, if you look at Solana, initially it got criticized a lot. That hey, it's too centralized, it's this and that. And if you look at it, they have progressively improved their decentralization uh, capabilities. Like there are more nodes now, they're more geographically distributed. They're working on a lot of angles to actually become less centralized in a way. And they got so much criticism initially, but I think their go-to market was so strong. It was so simple that, hey, look, this is a single chain, it's fast, it works. So I think when I look at the Bitcoin world and I see a lot of these projects and they're sort of like fighting over, hey, my design is better than yours, assuming that because my technical design is better than yours, we are going to sort of like dominate the market. And my personal view here is for users and also for a lot of developers, this 19-20 difference between a lot of these technologies is actually not going to, right?
Yeah, I totally agree.
Going to be your go-to-market strategy and how and a lot of these quote unquote soft things in the project that's actually end up going to matter a lot more.
I just put out a tweet that was saying, well, two tweets that really kind of riled people up. The first one was end users don't care about decentralization. They just want like basically good UX and a good product. That was one that got like a ton of views, and all the Ethereum people were coming at me in pitchforks, which is classic. Somehow my brand has turned from like my entire career was made on Ethereum, and now I'm like not aligned with Ethereum. I don't know what's going on. It's weird. I need to rethink my life choices, I think. And then the second one was crypto doesn't have a tech problem, it has a go-to-market problem. And that I think is like a nail on the head with what you're saying. And so like I don't care like where it's built or what ideology or how, if the nodes are 4, 5, 8, 12. Like as long as there's like some sufficient decentralization, there's a level of censorship resistance, there's a roadmap towards progressive decentralization. Just like give me a damn good product, and make it work and get users and onboard new people. Um, and so I've been kind of fighting the Ethereum camp in this the last couple of weeks, and it's been kind of fun.
Yeah, I mean, just to kind of build on top of that, which is that, this is like may the best tech win. And it's kind of like going to diffuse and permeate throughout, the industry anyway. The ones who end up adopting that technology and then continue to drive it forward are the ones with the best go to market that end up surviving. And I think this applies to the BitVM conversation that you mentioned, and it applies to AI and DeepSeek as well, right? They just went and open sourced their entire model. They did it way more efficiently than OpenAI or some of the other ones. BitVM, I imagine, will follow a very similar path. The best models will get open sourced and then adopted by the companies that end up surviving. Um, and so, Stacks, like you said, Muneeb, you've been doing this for a very long time. You have survived and stood the test of time. What lessons, have you drawn from your own go-to-market strategy? If you were to reflect a little bit on the Stacks go-to-market, what worked well, and what maybe would you have changed if you had a second go at it? Because we have a lot of founders and builders that listen to this podcast, and they are trying to get educated on the best go-to-market strategy. So please.
Reflect a little bit on what went well, what could have been better. In terms of what could have been better, I think one thing I already mentioned, that I do think that we were too much focused on technology and less focus on, hey, how good is the product? How good is the UX? How good is the speed of execution, right? Like one thing, if you're in the Solana ecosystem, and I'm not like fully in it because I'm fully focused on Stacks, but I see it. Like there's a culture of shipping, right? Like if people see that, the velocity of shipping is actually very fast, that even if they see something that's like not fully there, they're still excited about it because they know there's a new version coming in like 2 weeks or a week or 3 weeks or whatever, right? So I think those were the things that probably we didn't pay that much attention to. But one of the things that I realized just personally, even before the crypto industry and even definitely during the crypto industry, is that you have to go back to like day zero, right? Like just reset everything. Like, hey, if you were starting today, what would you do? And what are the things that are important? So I do think that from a cultural perspective, even at Stacks, like we have done this like extreme like product focus. Like just look at the product. Is the end product something that you would love to use? Like I had this tweet recently, which for people who are deep in Ethereum or Solana, they wouldn't really appreciate it. But for Bitcoiners, where the UX is typically waiting 10 to 40 minutes for a transaction, best wallets are sort of like Electrum or Sparrow, or right, like on your desktop, like being able to move, like, and if you've tried using Lightning, like, it's sort of like clunky and has these channel capacity or routing issues. Sometimes things move, sometimes they don't. And it's fairly limited in terms of how much capital you can move. So I was moving like 2.5 BTC, like roughly 250K. Uh, like it's not like, 10, 20, $50 million, but I could move it on Stacks and being able to do it. So I did the transaction. It's a great UX wallet called Leather. It's a web wallet. And by the time I click send I went to the Explorer to check my transaction, it was confirmed. Just having that UX of, oh, I actually just sent 250K, which you could never be able to do on Lightning because most channels don't have enough capacity. Lightning might be fast. And Bitcoin L1 is slow as hell, right? 10 to 40 minutes, right? And having that experience in Bitcoin was like a aha moment. Oh, finally, we have a product that we can actually love and use ourselves, and which maybe table stakes for so on, right? But I think Bitcoin is such a large market, and maybe we can connect this to some of the institutional talk that is happening. That being able to bring sort of like that table stakes type of UX and programmability and enabling Bitcoin DeFi, I do think it's a pretty big deal.
Yeah. I've been pushing a lot of purpose-built chains. Like, I think purpose-built chains are very important. Purpose-built chains, like general purpose chains are kind of, and you may not agree because I'm not sure how you kind of categorize Stacks, but Bitcoin to me is kind of like very purpose-built for it's very much just there's not much execution that happens. There's no staking, there's no DeFi. It's just very much just payments and store value, and then you kind of have Stacks becomes like this purpose-built environment for basically all the Bitcoiners who want to do.
For BTC, basically, Stacks is put out for BTC, right? That's where
Correct. Right. And so that to me is like a very easy mental model to understand why these chains are built in these ways. And so kind of looping that to this institutional conversation. Unfortunately, we did not get to meet in St. Moritz last week or 2 weeks ago, but I was there for about 36 hours, 48 hours, shook hands with at least one guy that was buying Bitcoin in 2011 and now runs a public company. I think there was rumors that he was like $500 million of Bitcoin. There was so much talk about stable coins, about Bitcoin staking, Bitcoin yield. Ripple was a big topic of conversation, ETFs for Solana. So before we get into just exactly like what's going on with stacks and the institutional side, what were some of your key takeaways from CFC? What was the biggest surprises? What got you the most excited? Was it bullish, bearish? Are the institutions coming to buy our bags? What's going on?
Imagine if the world's GDP moved on chain. Guys, say GM to SafeNet. The newest protocol by Safe isn't a blockchain and it's not a new layer 2. It's a transaction processing network built to send money anywhere and swap anything on thousands of layer 2s from a single universal balance in sub 500 milliseconds. It's fast, it's smooth, and it's simple. And it's built with safe multi-sig level security in mind. SafeNet unlocks smart accounts across multiple chains, allowing users to supercharge security, scalability, and speed. So get started today at net.safe.global and remember to follow @safe on X. Welcome aboard on our journey into the singularity. This is the endgame roadmap for Frax and Fraxtal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fraxtal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire app chain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fraxtal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fraxtal mainnet. Bridge your tokens and bring your Frax assets into the Fraxtal ecosystem. Join today to get the best out of Fraxtal. You are still early. Join today. Take part in our expedition into the singularity.
Yeah, I think CFC is one of the best conferences out there. Nicola, who runs it, he does like an amazing job paying attention to like every detail of the event. And I think the way it's set up is also very interesting, because what happens is that a lot of people, like once they cross a certain threshold level of success, they're not interested in going to a lot of these events, right? Like it's like even for me, like I'm like working full time, going hard, right? But when I go to conferences, like sometimes I get mobbed, sometimes the conversations aren't that interesting. And I think CFC is like one of those places where, because it's sort of like a semi-vacation for people, like especially if you're really into skiing. So you're staying at a nice place, it's very controlled. Especially the speaker list and even people who attend, like you have to get approved to even just attend. So they control the quality of the people that would be interacting there. And especially within the speaker circles, like there's always a high quality crowd. So people like Arthur Haynes would always show up, right? Like or other sort of like top, like Brad from Ripple. I know Ripple can be controversial depending on the circle you're talking about, but people actually show up in person and they spend time there. Like some of the best, I think, business meetings happen in the coffee area of the event. And I think
I had some good ones at the hotel lobby there.
Yeah.
You just walk around, you shake hands, and all of a sudden you're talking to like somebody who's done X, Y, and Z, and you're like, what? So I share those similar feelings.
Yeah, it's a great event. Like basically, the feeling I get there is at very large conferences, like let's say Token 2049 in Singapore, the high quality people would try to avoid the big crowds, and they would have smaller either meetings or events where it's like they're doing their side events, right? Like that typically for me is like just more interesting. Yes, you'll go speak at the big event. Uh, and I think CFC just cuts off the big stuff and it just focuses on what would have been a side event at a large conference.
So for all of us who are plebs who didn't make it into the event, because let's be honest, I didn't have a ticket, I just showed up. What was the key takeaways of the conversations? What are the heavy hitters in the industry, inside and out, discussing with the institutional crowd? Where is the institutional money flowing? What are they most interested in? And talk to us about stacks too.
Yeah, so I think I do think Bitcoin dominance is going up. Like Bitcoin is crossing a certain threshold level now, where it's just too hard to ignore. Not just only too hard to ignore, people sort of like get that on a risk-adjusted basis, it's your best bet in in crypto. So I think the profile is very different, right? If you're a large institution, you care about risk. If you are a 19-year-old, like who's just sort of like gambling, your risk profile is very, very right. Like people who are in the business of preserving their wealth, risk matters a lot to them. So it is very hard for them to allocate capital to something that comes across as risky. And I think one thing that people still don't fully get is on a risk adjusted basis, Bitcoin is by far the best bet in the crypto. And what I mean by risk adjusted basis is if Bitcoin, I think Arthur Haynes had this essay came out last night, that if Bitcoin goes down 30%, everything else is going to nuke, right? Like more than 50%, 60, 70, maybe 80%, right? So, and everyone knows that, right? All these assets are correlated to Bitcoin. So if you're sitting in Bitcoin, at least you're protecting or your downside. Whereas your downside on some of these other things could be 98%. And Bitcoin, and some things might never come back, right? Like there are these interesting charts. Actually, let me tie that back into stacks because this is just from today. Someone was posting a thread about a lot of projects were basically losing value against Bitcoin for the last 5 years, right? So the curve looks like, it looks like death. Like if they're just losing value against Bitcoin and it looks like they're going down to zero. And Stacks is actually one of the rare projects that has appreciated against Bitcoins 3 times out of the last 5 years. So it is trading at some of the lowest points right now. Like I think because of the slowdown and the initial excitement in Bitcoin L2s and so on. But it has done this 3 times in the past where it appreciates like 5x against Bitcoin. And most projects don't do that. Even Ethereum hasn't done that, right? Like Ethereum's all-time high against Bitcoin was back in 2017. And it has sort of been like slowly losing value against Bitcoin or that. So I do think that the way I think about Stacks is it is a very complementary network to Bitcoin because it makes Bitcoin more valuable. And we've sort of like already achieved some of that so far, because if you remember last cycle, Bitcoin was treated as a pet rock. Everyone's like, you can write this thing off. It's just old clunky technology. Ethereum, Solana, and these things are the future. And now whenever someone tries to say you can't do X with Bitcoin, you actually have a project you can show them. Oh, you think you can't take loans against your BTC in a decentralized way? Here go at Zest, right? And try that right now. It works today. Or you don't think Bitcoin has NFTs? Look at the trading volume of ordinals that is happening right now. So I think for every criticism, we already have like a comeback, and Stacks become sort of like this unique thing where because Bitcoin has to be simple and you can't change it and it can't innovate at the L1, you almost have to have this other L2. And now there are other options as well, but I think there's likely going to be one big one or maybe a handful in the future. But you need that. You need that really successful L2 for Bitcoin to defend itself against every other project that's out there. Because other capabilities that these projects have, you can just plug that into the L2 straight away. The L2s can evolve much, much faster.
Exactly. That's the whole point. It's like they're like these iterative, adaptive beasts on top of like this dormant bedrock that is fully censorship resistant. That's like the end game vision, which is again beautiful for Bitcoin. So back to the institutions here. They're very interested in tokenization. What's going on with the tokenization of like stocks, bonds, like why, like, I feel like this has been like a meme for so long. Like Robbie and I have been in since 2017. It was like, we're gonna tokenize everything. And now we have Larry Fink on CNBC talking seriously about wanting to tokenize stocks, bonds, and other assets. Was there much talk about that at CFC? And
Yeah,
what is your takeaway here?
I think that there was, and this is like there has been an emergence of interest in RWAs, which are basically these tokenized assets, like real world assets. And my personal takeaway is it's again because of these like new types of institutions entering the market, where it's hard for them to understand the value of something if it's not backed by something. So tokenized assets make a lot of sense to them because then it's just a digital representation of value that's actually held outside of the chain. And that is like sort of like call it like boomer mentality or something, but that is something that it's this boomer very easy for them to understand that the value is actually outside of the chain. And they're like, I don't understand how there can be any value on the chain. But yes, it's just a digital representation of it. So that sometimes actually makes sense to them even more than Bitcoin. And then the next step is when you tell them how Bitcoin has inherent value because energy is consumed. It's like digital representation of energy. Somehow sometimes I pitch it that way, and it makes sense to them. And then I also separate Bitcoin from other things that, hey, look, Bitcoin is actually like digital gold or digital energy, however you want to think about it. And then everything else is technology, right? Like it's easier for them to think of that as like a tech stock than other explanations, right? But RWAs or tokenized assets to the boomer crowd is actually a much simpler pitch.
That makes sense. Did you hear much about stablecoins? Like, was there like excitement about stablecoins for international payments, maybe from like Asia or Latam? I know that there's like a senior advisor of Brazil there, and there were some other kind of representatives from, Latin America. So, was there much talk about that, and what's kind of the status there with the institutional appetite for stablecoins?
Yeah, so I would say two things. One is like I've personally missed the stablecoin sessions. I'm probably not fully updated on it, but in general, I think stablecoins are um, the thing that has the most product market fit, and a lot of people understand that. They're like, yes, this clearly has product market fit. Like I think Tether, they report some numbers like 300, 400 million users, right? And that's like one stable coin. And then there's USDC. Uh, Athena's founder was there, and they're seeing a bunch of traction with their work. So in general, I think stable coins are considered one of the prime examples of when people ask like, "Hey, show me product market fit in uh, in the industry." And what are people actually doing? And stable coins, you're great examples. Like people who don't have access to bank accounts, the way they're using Tether to make payments and all sorts of like countries around the world. And I think
Did you meet Paul from Plasma?
I know I did.
Okay, okay. Plasma is a really cool project. I'm not gonna show it too much here, but they're doing stablecoins on Bitcoin. You should definitely chat to them. But yeah, I thought that that was gonna be a lot of institutional interest. And then what about like the asset flows in particular to like either the like Stacks token or other crypto tokens themselves? Like, is there much appetite for like private deals or conversations around like, hey, there's an opportunity to invest into X, Y, and Z protocol. Here's our roadmap. Like, is there institutional interest not from like BlackRock, but from like high net worth individuals or family offices to invest in what we know as like crypto assets or altcoins, etc. Or are we not deep enough in the bull market quite yet?
No, I think it's definitely interest, especially the type of people who come to CFC. A bunch of them are like family offices, so they're not looking to make direct investments, but they are looking to either put LP capital into funds, but they want to stay updated on like, hey, what's going on. So that helps them sort of look at which funds to allocate. And then there are some family office people that I met who are like, let's say LPs in like 5 different funds. And then there are some projects who just come up a lot, like imagine like a Solana or a Stacks or something. And they're like, wait a minute, this project, I have exposure to 5 funds to this project. Maybe I should just go and build direct positions as well. And so, not pay the fees in the middle. So I think there's some of that, but I would say in general, the type of capital that comes to CFC, they don't do direct deals unless it's a very big deal. Like, hundreds of millions of dollars, and it's a bit large round, and they're getting some sort of a discounted sort of like an offer. They would put their capital. For early stage projects, they would rather go through LPs because the LPs specialize in sort of like evaluating those projects. And typically these family offices, they don't feel like they have the skill set to play in the seed or even Series A type stages.
Yep, makes sense. Well, cool, Rob. I appreciate you let me fire off some questions here. I've just got one last one, and I think Muneeb, you're probably ready to go. I know you're a busy guy. It's a kind of a double-parted question. The first side of it is, I'm curious what your perspective is on what's next for Bitcoin, right? We've like I said, Robbie and I joined the space in 2017, and we used to always make fun of the idea of institutions are coming and they're beyond here. It feels like nation states are coming now. So like, what's your vision for what's next on Bitcoin? Kind of like where are we at in Bitcoin's life cycle, if you will? And then similarly, where are we at in Stacks? What's coming up for Stacks? And kind of like how are those two going to kind of intertwine here?
Yeah. I think the institutions are coming meme, I remember from like 2017 and so on. But if you think about it, it's a little bit like when when you get when you cross like a certain threshold level, then everything happens at once. So I'll give the example of the ETF, right? Once like BlackRock has an ETF that's actually doing really well, you are going to get like 10, 20 others. Like it's almost at some point like it's it's irresponsible for a large financial institution to not play in a market that is seeing so much traction, right? So you're not going to get just one, right? You're suddenly going to get 20. And I think of like the nation state adoption as something similar. Like initially it's going to be hard, but as soon as I know El Salvador has done it, but people also think of it as a small country, right? Like, yes, they did it. But as soon as I think a larger country that has like real political muscle in the world does it, I mean, forget about even the United States. The United States doing it is just going to be like, shocking news. Uh, when it's real, like a Bitcoin reserve and there's actual Bitcoin in it. And I think everybody would, if that would just force the hand of everybody to do it. But even I would say, um, there are so many other countries, and this could come
Yeah, like a country like Switzerland would be like
you can
huge,
come
right?
from anywhere, right? And I think it's just a matter of time. There's so many private sort of like conversations I'm hearing. I'm not going to repeat here, but it's just a matter of time. Like as soon as someone does it, it's going to force the hand, and then suddenly 10, 20 other countries are doing it, and we will be, in a very different world for Bitcoin. So I think that's super exciting. What's happening for sort of like Stacks over here is that you know our thesis is that there's going to be one big successful L2 that's going to be worth a lot. We are sort of like the market leader. People, credit us for even creating this category, but we want to have this like day zero mentality that, in this market right now, like when we are thinking about, the next iteration of the product, meaning the protocol, the chain, but also like the ecosystem, like how do we stay on top of the game? And there's some like very sort of like exciting things going on. Like for example, Stacks already unlock 100% of Bitcoin hash power for security. I think that's a huge deal that you do transactions on the L2, stable coins, NFTs, RWAs, whatever you want. You do that on the L2 and you get 100% Bitcoin hash power. And Bitcoin hash power is just going to keep on going up, right? So in terms of our security, we're now just like piggybacking on top of Bitcoin. But the next big unlock is also going to be Bitcoin's economic power, right? We are already unlocking it through SBDC getting deployed in the L2, but there is a lot of interest in people want to stake this Bitcoin and like help bring economic power of BTC. And we're looking into some design. Some of this is already public. So we want to iterate fast. We want to sort of like incorporate any of the best designs. It might be like one-off end bridges that are coming up, and sort of like really focus hard on the go-to-market. And we see ourselves as sort of like the flag bearers for Bitcoin. And most of the users will actually end up using BTC on an L2 than an L1. So we take our job very, very seriously when it comes to that.
Fantastic. I've just learned that I can also do portrait mode. So thanks for teaching me something new about podcasting today, Muneeb, amongst other things. And Robbie, it's been a pleasure to chat with you again. It's been our first pod in some time. Muneeb, thanks so much for your time. Truly excited about what's happening in the future for Bitcoin. The nation states fighting a space race to accumulate Bitcoin is something from our wildest dreams of the early days. So props to you for staying heads down, and look forward to seeing you at the next event. Won't miss you next time.
Awesome. Take care. This is a lot of fun. Thanks a lot.
Thanks, Muneeb.